Hello, good morning, wherever you're watching from. Good morning and welcome to today live. Uh, welcome to today live daily live analysis on synthetic indices. All right. So if you are watching me for the first time, my name is Vetexx, and what I do on this channel is every day 6 a.m. to 7 a.m. Always go live to analyze the synthetic market together. All right. Using pure technical analysis and price action. So if this is your first time of joining us, do well to like, subscribe, and don't forget to join our Telegram community. And at the course of this analysis, if you are having any confusion, don't forget to drop your question in the comment section while I will look into it and answer it. Right. So before we move on, okay, if you are joining for the first time, just share the link to your friends, your family, those that are interested in trading so they can learn one or two. So what I'm going to do right now is I'm going to be sharing my screen with you and show you basically how I trade every day using technical analysis, using my trading model, right? And I'm going to be explaining everything to you. So let me share the screen right now so we can get started. So every day, what we used to do is that we analyze up to 14 pairs on synthetic market, which is the volatility indices and also the step indices. Okay, so I'm going to be marking out the structure. Sometimes, if we see setup, we'll be taking it together, and also I'll always be updating most of those setup in the community. So if you're joining us for the first time and you're here to join the Telegram community, do well to join because that is where I post some of my updates, and that is where you can also follow up with anything that you're missing out on. So today I'm going to be analyzing all the 14 pairs. All right, I'm going to be analyzing all the 14 pairs, and then let's see what we have today. If you're going to see any setup or we are not going to see, you just have to check and see. All right, so first of all, like I always explain, this trading model we use is called the advanced market structure, okay, whereby we analyze pair from which the best approach to using the advanced market structure, we always do a top-down analysis on all the pairs every day. So that is where we get our quality setup from, okay. And the system is called, you can call it advanced market or the algo market structure. And quickly before I start doing top-down analysis on some of those pairs, I'm going to show you exactly how the model look like and what you always look at for every day. All right, so this is it. First of all, we have price creating series of higher high, higher low, and then we will have this high being created here. Okay, we have this high created here. Okay, now we anticipate price to take out this high that is created here. We consider this as our transactional liquidity. Okay, so price will take it out, all right, to create this protected high. This is for a sell. Okay, and then this low here, we anticipate price to take it out to give us our first break of structure, which is our row number two. Row number one, there must be a sweep of liquidity. Row number two, there must be a break of structure. So now price has broken this structure, all right? And what do we anticipate next? Anticipate price to retrace and to retrace 50% to give us what structural liquidity, which need to be taken out later. Okay, and then price need to break this second structure, which is our row number four. All right, then to give us our second break of structure, which is this. Okay, and row number which is our row number four. Yes, then the rule number five is price need to take out this newly created liquidity and continue to the opposite direction, which is this. All right, and continue to the opposite direction. So rule number one is there must be a sweep of liquidity. Rule number two, there must be a break of structure. Rule number three, price will retrace 50% to give us structural liquidity. All right. And rule number four, there must be another break of structure, which is this. There must be another break of structure, which is this. All right. And then rule number five, price will retrace 50%. Price will, let me go over it again. Rule number one, there must be a sweep of liquidity, which is this. All right. Let me mark it. This liquidity is also called transactional liquidity. And what is it used for? It's used for correction. There must be a sweep of liquidity. Okay. Rule number two, there must be your first break of structure. Now, this sweep of liquidity gives us this protected high because it is used for correction. Then rule number two, price must retrace to take out the newly created low to give us our first break of structure, which is this, which is rule number two. And rule number three, price will retrace 50% to give us structural liquidity that need to be taken out, which is rule number three. And rule number four, price will retrace to take out the newly created high. Remember, after price give us this structural liquidity, which is used for continuation, it retraces and it at the time of this retracement, it gives us this newly created low. And then price needs to take it out to give us what our second break of structure, which is rule number four. And rule number five, most price must retrace to take out this newly created liquidity and continue to the opposite direction. This was the direction it was going in. So as you take this liquidity out, it starts moving to the opposite direction. So that is rule number five. And this zone becomes your what? Point of interest. So price tap into your point of interest as you take out this liquidity and continue the move to the opposite direction. So that is exactly what happened. That is how the advanced market structure or the algo market structure. So this is it. So this is what we look at for every day in the market. This is what we look at for every day. All right. Believe this is clear enough. If you don't understand anything I just said, you can drop your question in the comment section and I'll answer you right away. Okay, so this is what we do every day. So right now, how do we, the same thing you look out for when you want to sell is the same thing you still look out for when you want to buy. It's the same approach. Okay, now when doing top down analysis, okay, we will have this structure on the higher time frame. This structure will form on the higher time frame. This whole structure like this will form on the higher time frame. Once we see this structure on the higher time frame, right? Once this is formed on the higher time frame, let's take for example, this is a daily time frame or a weekly time frame. Okay, we'll scale down to the 4-hour time frame and look out for this same structure again. Now, if because the daily time frame and the weekly time frame, they are our directional, we use it as directional bias. Okay, where they are coming from, where they are going to, is the same direction we are going to be following them. So if this is bearish on the daily, on the weekly time frame, you don't have any business, okay, trying to buy when the trend is bearish or bullish on the weekly time frame. Okay, and if it is bullish or if it is bullish on the daily or weekly time frame, you don't have any business trying to sell. All right, now if you have gotten this direction on the 24-hour or weekly time frame, you go down to the 4-hour time frame, okay, or the 1-hour time frame, and look out for this same pattern. Once you see this pattern on the 4-hour time frame and 1-hour time frame, now this is going to be your hourly structure. That is where you start trading from. After you spot this on the 4-hour time frame or the 1-hour time frame, just go down to the 15 minutes time frame or the 30 minutes time frame and spot this pattern again. That time when price come into your POI, you can look out for your confirmation and start selling. So if you are wondering what type of confirmation I use, I've already made a video in the playlist. You can just go to the playlist where uh, I name the playlist advanced market structure. You can just check out the playlist, you see the topic there, go through it, learn and get a clearer understanding. Right? So this is what we do. The higher time frame, we look out for this pattern on the higher time frame. we scale down to the 4 hour time frame or the 1 hour time frame. Look out for the pattern again. If there's a continuation right there, and then you go to the 15 minutes time frame and the 1 hour time frame. Mind you, if you see this pattern on the 24-hour time frame or the weekly time frame, you do not have any business trying to sell on the 15 minutes or 30 minutes time frame, because majority of the time a little retracement will stop you out. That is why whenever you see this on the weekly time frame or the 24-hour time frame, you still need to go to the 4 hour time frame and 1 hour time frame and look out for this same thing. Once you spot that on the 4 hour and the 1 hour, you then go to the 15 minutes or the 30 minutes time frame and look out for this. That is the time frame you use for your entry. I believe this is clear enough. So first of all, this is how I trade every day, and it's same thing I just explained to you, same thing I've been doing over time. So let's move to the first pair that we are going to be analyzing for today. Let's check the first pair we are going to be analyzing today. So the first on our list is step 200. Okay, step 200. All right, let's check out what step 200 has for us. So step 200 on the 24-hour time frame, I'm going to be removing everything I've marked. Step 200 on the 24-hour time frame, you can spot a setup on the 24-hour time frame from what I just explained. Okay, I'm going to be marking out the recent point of interest. So first of all, on the 24-hour time frame, we have this. We have our support liquidity, row number one. Row number two, we have what? Our protected, our first break of structure. Row number three, we have price retrace 50% to give us structural liquidity. This becomes our protected high. Row number four, price give us our second break of structure. Remember, this is the daily time frame. So right now we're anticipating price to tap into our point of interest and give us a continuation on the 4 hour time frame. This is going to be something like this. So once price tap into this point of interest on the 24-hour time frame, give us this continuation. We can then scale to the 15 minutes time frame and look out for continuation again to start selling. So this is what we're anticipating on step 200. This is what we anticipate on step 200. But before then, let's check the 4 hour time frame. If there's anything we can spot out from there. On the 4 hour time frame, we also have this. So we anticipate price to do this on the 4 hour time frame for us. Okay, first of all, we have our sweep. We have our first break of structure. We have price retrace 50% to give us this structural liquidity that need to be taken out, and then price retrace back to give us the second break of structure, and then this is our protected high. So this zone becomes our what? Point of interest. This is our point of interest. Okay, so we anticipate price to come in, tap into this point of interest and start giving us 15 minutes sales continuation. Sales continuation until this target is taken out. So this is what we're anticipating on step 200. Exactly what we're anticipating. So once this happens, we have high confidence of taking more trade, catching more continuation. So this is what we anticipate on step 200. The next is what? Step 300. Let's check out step 300. Okay, we have a POI on step 300 recently, and price is already at the point of interest. So you can already see we've marked the point of interest out. We have our sweep here because the trend is bearish on the weekly time frame, bearish on the 24-hour time frame, but it's only giving us a structure on the 1 hour time frame. So we have our sweep here, break of structure, price retrace 50% to give us this structural liquidity, take out the newly created low, give us our second break of structure. Now price is at the POI on step 300. So what do? You go to the 15 minutes time frame and see if, and start anticipating for continuation. So if price doesn't respect this 1 hour point of interest, there's another one on the 4 hours. So let's check that one out. So we also have this. Let me remove it. We also have this on the 4 hour. First of all, we have our sweep of liquidity, which is row number one. We have our first break of structure, which is row number two. We have our protected high here. We have price retrace 50% to give us this structural liquidity, which is what? Row number three. And price retrace to take out the newly created low, which is row number four. This zone becomes what? Our point of interest. Okay. Now what do we anticipate? If price doesn't stop on this 1 hour point of interest, we are anticipating price to go to this, come to this zone and start giving us sales on the 15 minutes time frame. Sales continuation. Sales continuation until this target is taken out. So this is what we'll be anticipating. We are only going to be anticipating this if this doesn't hold. If this 1 hour doesn't hold, we'll be anticipating this. So the approach is quite simple. You just have to have a better understanding of it. Then you repeat the same thing every single time. So this is what we are going to be anticipating until this target is taken out. So let's wait if it's actually going to respect this 1 hour structure. If it doesn't, in case it doesn't, then we'll be waiting for this 4 hour point of interest. Let's check out the next pair, which is what? V25 index. Let's check out V25 index. Starting from the weekly time frame on V25 index, V25 index has been bullish on the weekly time frame. It has also been bullish on the daily time frame. So there's a daily time frame structure we have that we've been anticipating for the longest. So let's mark it out. So if you are seeing clearly, we have our what? First break of sweep of liquidity. We have our what? first break of structure, which is here. Price retrace 50% to give us for structural liquidity that need to be taken out, which is this. And then this is our protected low. The whole of this zone becomes what? Point of interest. So we are anticipating price to come to this zone, give us continuation on the 4 hour. Right now that we have to wait for this weeks, let's go to the 4 hour time frame and check if price is reacting from anywhere. So from the 4 hour time frame, you see we've already marked the POI as. So first of all, we have our sweep, which is this break of structure, structural liquidity, second break, structural liquidity, point of interest. So this zone like this is our point of interest. So this is the continuation. You can see price has already tapped into it and started reacting from it. Okay, so this is our point of interest. Now the next thing for us to do is go to the 15 minutes time frame and start looking for continuation. If there's any continuation, start looking for it. So we already had this continuation that we've marked now. Our sweep of liquidity, which is here, the 15 minutes, our break of structure, which is this. This is our first break, structural liquidity that needs to be taken out, and this becomes what? Our second break of structure. So price, we anticipate price to come into this POI and then start buying to the opposite direction. So this is what we're anticipating on V25 1S, anticipating this. Okay, so this is exactly what we're anticipating. So this is what we have on V25 1S. So let's check the next pair. So far we haven't gotten any good setup on any pair at the moment. So let's check V100. V100 has been bearish since last year and it has tapped into another 24-hour time frame, 24-hour POI. So this is the POI we have on 24-hour. First of all, we have our rule number one, sweep of liquidity. Rule number two, price retrace to take out the newly created low to give us our what? First break of structure. This becomes our point, our protected high. And then after price retrace 50% to give us what? Structural liquidity that needs to be taken out. And then it gives us what? Our second break of structure, which completes the fourth rows. And then the fifth row, price take out the newly created liquidity and continue to the opposite direction. You can see that this liquidity here has been taken out and price is trying to push to the opposite direction. So this is our point of interest. So what do we do now? Let's go to the 4-hour time frame. We are going to spot a continuation on the 4-hour. Currently, we can't see anything on the 4-hour. Let's check the 1 hour. On the 1 hour, there is nothing on the 1 hour too. So we are going to sit on our hands for now and then we anticipate that move to form later. So we'll be on the lookout on V100. Be on the lookout. Once it gives us what we are looking for, we'll start taking it. But for now, there is nothing on V100. So we are going to be looking out for another. We are going to be checking out another pair since there's nothing on V100. So we're currently anticipating a sell structure on the 1 hour time frame or the 4 hour time frame on V100. The next is V10S. Let's check out V10S. So V10S is bearish, it's bullish on the weekly time frame, no structure on the 24-hour time frame, but it gives a continuation on the 1 hour time frame. So which we mark out yesterday. So clearly you see we have our sweep of liquidity, we have first break of structure, which is right here. You can see our price retraces 50% to give us structural liquidity that need to be taken out, and they take out the newly created high to give us what our second break of structure. Now this zone becomes what point of interest. Now let's go to the 15 minutes time frame. Remember, this becomes the starting point, and this here becomes what the finish point. So let's go to the 15 minutes time frame and check for a continuation. On the 15 minutes time frame, there is no continuation at the moment, so there's nothing we can do right now on V10S. Okay, there's no continuation, so we're going to start anticipating continuation on V10S. So currently, this is what we have on V10S. Let's go to the next pair, which is V75 1S. So on V75 1S, starting from the daily time frame, we have a sell structure on the daily time frame. Okay, so if you have been following, let's mark this together. First of all, we have our what? Rule number one, sweep of liquidity. Rule number two, we have our first break of structure. So these are the 5 rules that guide the advanced market structure. First of all, we have our sweep of liquidity. Second of all, we have our first break of structure. Thirdly, we have price retrace 50% to give us what? Structural liquidity. Now, this is liquidity 2, this is liquidity 1. This one is used for correction. This is used for continuation. That is why anytime price take out this structural liquidity, the move will always continue to the opposite direction. So we have sweep of liquidity, rule number 1. Rule number 2, we have break of structure. Rule number 3, price retrace 50% to give us for structural liquidity, which is liquidity 2, used for continuation. And then price retrace after creating the structural liquidity to take out this newly created low to give us what second break of structure. So to make this advanced market structure easy for you, you can just say there must be, you just when you're marking out your structure, there must be 2 break of structure, there must be 2 liquidity. So we have liquidity 1, liquidity 2. Liquidity 1 is used for correction, liquidity 2 is used for continuation. First break of structure, second break of structure. The first liquidity gives you the break of structure, the second liquidity gives you another break of structure. So you have liquidity 1, liquidity 2, break 1, BOS 1 and BOS 2. Okay, so this zone becomes your what? Point of interest. This becomes a point of interest. You can see once price take out this liquidity, which is used for continuation, it will move to the opposite direction. So this is the starting point, and this right here below is the finish point. Okay, so now that we have our direction on the 24-hour time frame, what do? We go to the 4-hour time frame. If we are going to spot a continuation move on the 4-hour time frame, so you can see on the 4-hour time frame, I've already marked this down yesterday for those of you that joined. Okay, so we have our what first sweep of liquidity. Our first break of structure is here. Price retrace 50% to give us structural liquidity, and then after giving us structural liquidity, it break the newly created low to give us what second break of structure, which is why we have this. Alright, and this becomes our point of interest. So this is the 4 hour time frame. So what do we anticipate next? We anticipate price to tap into this point of interest and start giving us continuation on the 15 minutes time frame or the 30 minutes time frame. Then we can start selling. Okay, you can start selling. So price might do something like this again. So you can have up to uh, 3 to 4 continuation setup before price take out this target, because this is the starting point, this is the finish point. So this is what price might start doing once you tap into this point of interest. You can start taking series of sales. Okay, you can start catching sales until the target is taken out. So this is what we'll be anticipating, something like this. So it's all about this trading model. It's all about you catching more of continuation, and that is how you make the synthetic market. So this trading model works so well on synthetic indices. If you can just understand how the model, if you just pay close attention, learn about this model, because I've already explained everything in the playlist, and you can watch my previous live session. I repeat the same thing every time. So if you just give it your time, you're definitely going to get a clearer understanding of it. Once you see is structure on the 24-hour time frame, you go to the 4 hour time frame, 1 hour time frame, and spot the continuation. Then from that time frame, you go to the 30 minutes or 15 minutes and spot more sales. Okay, that is when you can start executing on those sales. Look out for a confirmation and then start taking sales, 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 sales until the target is taken out. So this is what we're anticipating on volatility 71 index. Okay, so let's check out the next pair that we have, which is V100S. What is V100S trying to share today? On V100S on the weekly time frame, all right. On the weekly time frame, we had a buy in the weekly time frame. The 4 hour time frame, there is nothing, but on the 1 hour time frame, we had a buy continuation, which I already marked out yesterday. So for context, if you are just joining this live for the first time, okay, every day 6 a.m. to 7 a.m. Okay, we'll always go on live on this channel to analyze the synthetic market. Remember, synthetic market you don't need fundamentals because it's not affected by news and the market is open 247. So what we use on synthetic market is pure technical analysis and price action. So just for you, it's just let's just say technical synthetic market, you trade it with just pure knowledge, and that is why you need to have this knowledge. Okay, so once you join us every day 6 a.m. to 7 a.m., you gather a lot of knowledge, and then you can start doing this on your own. And if you have any question at the course of this live analysis, you can always drop your question in the comment section. Comment in the comment section, let me know you are watching, and you can always move on together. Okay, so I've already marked this down on this 24 hour on the 1 hour time frame, for which we have what our sweep of liquidity, first break of structure, which is here. Price retrace 50% to give us structural liquidity that need to be taken out, and then price break the newly created high to give us our second break of structure. Now we have first sweep of liquidity. This is another liquidity that need to be sweep out. First break of structure, second break of structure. Now the whole of this zone becomes what? Point of interest. Now this point of interest is this is what we are anticipating price to come into. So once price come into this point of interest, we'll start looking for buys on the 15 minutes, 10 minutes, 30 minutes until what this target is taken out. Okay, so this is going to be the starting point This is going to be the starting point, and this right here is going to be the finish point. So let's check the next pair on our list, which is V50. So V50 currently smash target on the 24-hour time frame. So we don't have any business with V50 anymore on the 24-hour time frame. So we don't have any business on the 24-hour time frame on V50 anymore. So let's go to the recent price action, which is the 4-hour time frame. So on the 4-hour time frame on V50, we have this. Okay, we have this on the 4-hour time frame. Right. So first of all, we have our sweep here. Okay, if you want to see it clear, let me take it to 1 hour so you can just see it clearly. Okay, this is clear enough. So first of all, we marked this down yesterday for our analysis. First of all, we have our sweep of liquidity to our protected highs here. So this first sweep of liquidity gives us what our first break of structure after it's taken out, after the low it created was taken out. Okay, so this is how the structure normally form. Let me just show you guys something. Structure normally form like this. You see price creating series of higher high, higher low. Okay, now this is going to be like this. This high is already here. So what do we do? If rule number one, price will take out this protected this high here, which is our transactional liquidity. So once price sweep it, all right, it give us what our what protected high. So now this becomes the newly created low that need to be taken out. So price will sweep it to give us what? Take it out to give us our first break of structure. And price will retrace 50% to give us structural liquidity that needs to be taken out. And then this becomes our newly created low to give us our second break of structure. So now this structural liquidity break take out this low to give us our second break of structure. Now remember this liquidity need to be taken out the same way this one was taken out. So this liquidity now is taken out, okay, and continue to move to the opposite direction. So that is how we come about having a sweep of liquidity here, coming about having our first break of structure, having our what structural liquidity. These are protected high, and that's how we got our second break of structure. So this zone becomes what point of interest. So when price tap into this zone, we anticipate it to start moving to the opposite direction on whatever time frame it is, provided that your top-down analysis is correct. So that is how we come about this whole thing. Okay, good. So now we have this. This is the newly created structure we are anticipating. So we have our what sweep of liquidity. We have what first break of structure. Price retrace 50% to give us what structural liquidity, which is here. This our protected high, and this is our what second break of structure. This is our POI. So now we are anticipating price to tap into this POI. So we are not going to be entering the trade on this POI immediately. We will wait for price to give us a continuation on the lower time frame, which is 10 minutes, 15 minutes, 30 minutes before we can start to look out for confirmation in our POI and start selling. Okay. So once price tap here, we just wait for it to start giving us continuation on the lower time frame. Then we can start anticipating price to come into our POI at that time. Then we can start selling until this target right here is taken out. So that is basically how the whole system work. So now let's go to the next pair on our list, which is V51s. Majority of this trade has already been marked down. V51 just smashed TP on the weekly time frame. So on this derived trading view, you cannot really see weekly time frame on this on their trading view unless you check your MT5. Okay, it's only you can only see that on the MT5. So unless you check your MT5, that is where you can see it. Right. So first of all, we have our sweep on the 4-hour. We have what break of structure. Price retrace 50% to give us structural liquidity, and then we have what our second break of structure. So this point, so this one becomes what? Point of interest. So these are point of interest. So price tap into this point of interest. So we'll be anticipating buyer's continuation on the 15 minutes time frame until this target is taken out. So we don't jump into sets on the higher time frame whenever I tap into a period. We always wait for the lower time frame continuation structure. That's when we can start taking our buys. Because sometimes price might just come like this. Price will come into your POI like this. You enter, you start going in your direction, then boom, takes you out. And that is not what we want. So that's why we always look out for continuation. Okay, once you look at the continuation, there's more chances that the price is definitely going to hold. So this is what we have on V51. So let's go to the 15 minutes time frame. If we are going to spot in buy setup, let's setup. Nothing at the moment. You don't have anything at the moment. Okay. Until price maybe do the loss work, do something like this. Come into our POI and boom, start buying. So if you have something like this later on, good. But for now, you don't have anything on. V51 is, remember, quality over quantity. Okay. So what do we have on step 100? Step 100 has been bearish, all time bearish. So we have this structure on the 1 hour yesterday. We are anticipating price to give us continuation on the 15 minute, but it didn't. It just went straight to the target. So we have our sweep. Yes, we have our what, first break of structure. Price retrace 50% to give us structural liquidity. Then we have what, our second break of structure, and this is what our point of interest. So instead of price to give us continuation on the 15 minutes, 10 minutes, it just went straight to the target. I have to tell you, the system works so well. Okay. If your top-down analysis is correct, if you know where price is coming from, where it's going to, you only just to risk on the trade. Okay, see the way it's moved to the target. Move fast, take out the target and still break it. So the fact, if provided that your top-down analysis is correct, you know where the price is coming from, where it's going to, you don't have any issue. So this trade, you can also consider it as a 15-minute structure. If, let's say this is a 15-minute structure, so we would have considered this trade if this was coming from a 4-hour point of interest. Let's say we had a 4-hour set, a 4-hour structure somewhere around here. I would have taken this trade. It would have been one of the best trade we have taken. But of course, it didn't do that. So we are going to move on. What has happened. So we're just going to move on to the next pair. Right, so move on to the next pair. So let's check the next pair on our list, which is V15 index. V15 index. Alright, we already have our marks up on V15 index. Starting from the 4-hour time frame, we have a sell continuation. We marked from our live analysis yesterday. So we have this sweep of liquidity. We have this first break of structure. Price retrace 50% to give us structural liquidity, and then we have a second break of structure. So we'll be anticipating price to come into this point of interest, start selling to the opposite direction. Okay. So if you're watching this video on replay, do well to like, do well to subscribe if you are getting values Okay, so that whenever I go live, you'll be the first to get notified. So you can always join me every day. And if you are looking forward to trade synthetic indices, the link to register on the broker, which is called Deriv, so in the description of this video, of this live analysis, check the description. You're going to see the link. Click on it, register, fund your account, and let's trade together. So moving on, we have two POI here. One is on the 4 hour, the other one is on the 1 hour. So if price doesn't come to this 4 hour, price will stop at the 1 hour. So it depends on the one price respects. If price respects this, we'll take it. So we have sweep of liquidity. We have our sweep of liquidity here. We have break of structure one. Price retrace 50% to give us structural liquidity. And then we have second break of our structure. Okay. So this is what we have. So once price tap into this point of interest, which is this, we're going to start taking series of sells until this target is taken out. Until this target is taken out. Until this target is taken out. Okay. So that's what we have on V15s. Let's check the next pair, which is V25. What do we have on V25? V25 has been bearish on the weekly time frame. It's trying to sell on the 24-hour. So we have this PY on the 24-hour. This is the 24-hour. Okay. So this shouldn't be hard again. By mere looking at it, you should always know how to even spot this and mark it with your eyes. Okay. We have this here and then we have this. This is 24-hour. Okay. So remember, this is our starting point. Price tap here, and this below here is our finish point. So once price tap into this place, we're anticipating a continuation on the 4-hour. So once price give us a continuation on the 4-hour, that is when we can go to the 15 minutes time frame or 30 minutes time frame to start taking sales until price take out this target. Understood? I believe that is clear enough. That should be clear enough. Okay, should be clear enough. So this is what we have on V25. So right now there's nothing really happening on V25. So let's check the next pair. It is the 500. The 500 is moving to the upside. It doesn't giving us anything very tangible that we can hold on to at the moment. So this is what me I'm anticipating on the 500. If it does that, because this is the 24-hour time frame. There was a 4-hour time frame structure we have been selling, but before smashing the target, price retraced and got it invalidated. So we have this. Okay, we have sweep one. We have break of structure two. So this becomes our point of interest. So the best thing for us to do now is wait for price to tap into this zone. Okay, to tap into this zone. Once you tap into this zone, you can then be sure of taking trade. But there's something that is happening on the 1 hour time frame. Let me check it again and see if it's something we can look into. Okay, it looked like a sell. Let me check the 5 minutes. Let's see. This is actually valid. The 1 hour structure. So So let's see what happened. Let's see what happened. But I'm not putting so much attention to it. I want price to come into this POI first. But whatever happened with it, I'm going to actually update in the community. So if you haven't joined the Telegram community, you just have to join so you don't miss out whenever I put any update about this. So let's just sit on our hands on this first and see what comes up later. So the next pair we'll be checking is V31S. So V31S is bearish on the 24-hour time frame, which will mark out majority of those pattern. So we have our sweep of liquidity here. We have our first break of structure, which is here. Price retrace 50% to give us structural liquidity. Now, so it's returned back to take out the newly created low to give us what? Our second break of structure, which is this. Alright. Now after the second break of structure, we'll go to the 24-hour time frame. Now remember this is 24-hour time frame. We'll go to the 4-hour time frame. Let's see if there's a continuation of the 4-hour. So from that 4-hour now, we can then go to the uh, 1-hour continuation. Okay, so this is what we have on the 4-hour, right? We're having something like this. This look good. Okay, we can't see it clearly, so let's go to the 1-hour time frame and check if this is something we should be interested in. Can we be interested in something like this? This is up to 50%. Let's check this out. Of course it is. So we have a sweep here. Okay. Okay. So we are going. So let me check the 30 minutes. I'm trying to consider this sweep, but it's not really visible enough. Not really visible enough. So I will just wait. I'll wait for a clearer structure. Okay, there's no need to hurry. I'll wait for a clearer structure. Since we don't exceed the hour time frame, we only look out for on the 1-hour and the 4-hour. Once it passes the 1-hour, 4-hour, we don't do anything more there again. So let's just wait for this. Okay, let's just sit on our hands and wait for this. Okay, so let's check the next peg real quick. Currently, we haven't gotten a setup yet. This is first day of February. The month is going to be really good, regardless. Let's check the 4-hour on this V90S2 just smashes TP on the 24-hour time frame. The whole pairs are just smashing target. So let's check this volatility 91S on the 1-hour time frame. So let me check if this is up to 50% retracement. No, really. So currently we can't anticipate anything on V91S. There's nothing happening on V91S at the moment. Okay, we don't have anything happening on V91S at the moment. The next on our list is V75. V75 has been bearish on all time frame. And take a look at this. Bearish on all time frame. Let's check the 4-hour time frame. Nothing is happening on the 4-hour. Let's check the 1-hour. Is there anything happening on the 1-hour? Nothing is happening on the 1-hour. We do not have a setup yet on V75. So now let's check the 400. Hmm. Starting from the 24-hour time frame, step 400 is bearish. Okay, it's bearish, but it's just trying to retrace. So 24-hour time frame, we don't have anything. 4-hour time frame, we still don't have anything. And same thing is on 1-hour time frame. So we don't have anything on this pair. So the only pair we are anticipating to sell currently on is just V25 oneness. Okay, V25 oneness. So we'll be anticipating something like this on V25 oneness. We try to come into our point of interest here and then give us a confirmation so we can start buying. But if it doesn't do that, at this point, all right, at this point, this sell is no longer a valid sell. Okay, it's been oversold already. It should have come back when it is somewhere around here. When it was doing this yesterday, it should have come back here. But what did it do instead? What did it do instead? Instead, it was doing this. It just has taken too long. Okay, so what price will do now is price might just come into this POI and then do as if it's going your direction and take you out and start moving again. So this setup is already void. This is void already. We are no longer interested in this uh, V25 1S. So based on this, based from past experience, this is what happened. If price start moving this long, and it doesn't come into your point of interest when you want it to come, okay, at least you should have done something like this and then drop down and go. But since it has done the whole of these things, okay, coming back here is going to be risky. And what are we after? We are after capital protection. Okay, we must protect our capital. So if price has been doing something like this, we just have to sit on our hands and wait for a clearer structure to form so that we can just start taking it. Okay, there are more opportunities that's going to come and then we'll take more trade, we'll make our money. Remember, this is first day of February, we still have 30 days left. So the goal is at least we can get at least 10 trade in a month, will be okay. Okay, at least 10 trade, 8 wins could be very okay. So we don't have to jump on every setup we see because of scarcity. Okay, so currently we don't have any setup we anticipate. All right, and once a good setup shows up, all right, I'm going to be updating in the community. So if you watch to this point, okay, if you watch the live session to this point, we've come to the end of today live synthetic trading analysis. And what we are going to be doing next is I'll update the community if there's any updates regarding the new months or if there's any new changes. Okay, so if this is your first time of joining, do well to like, do well to subscribe, and don't forget to join our Telegram, and don't forget to share this live to your friends. You can post it on your WhatsApp status or your Facebook or wherever it is, and we will so that others can join and learn one or two from it. So the one thing is synthetic, like I always said, pure knowledge, understanding technical analysis, unlike currency or crypto market where you need to work with fundamentals. Okay, but it's not everybody that even know how to do research. So synthetic market is the best place for you to be if you are that type of person that like everything to be good. Because from Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, Sunday, market is always open. Market doesn't have to close on Friday. You have to wait till on Monday before you trade. You can trade on Saturday, you can trade on Sunday. Every day of the week you can trade. and there's always opportunity. The reason why we didn't see opportunity maybe is the market is just trying to restructure itself. When market is restructuring, there don't need to be that enough setup until everywhere is good. There's some time in a day, I see up to two setup, three setup, four setup. Out of those four setup, the four of them might play out, three might play out, and all of that. So understanding technical, knowing how to do top-down analysis, your risk management, have good psychology, you are good. You are good to go. So I'll see you guys tomorrow, same time, 6 a.m. to 7 a.m. All right. See you on the other side. Bye.